But with Rumple, if you go to earn, you'll see all the different products you can just like deposit into there, and then you get the points into your safe wallet. If you go to trade, you can see the value of 1,000 points. So KPT means 1,000 points. So 1,000 Athena season 3 points, value that 2 cents. 1,000 Karak. I didn't even know we were in season 2 of Karak, by the way. That's wild to me because they don't have a token yet. 23-ish cents, symbiotic, DeFi, et cetera, et cetera, et cetera. And if you know how many points are being emitted per day per dollar, roughly, then you can take these values and get an implied APR. Now, of course, you can also do that with Pendle, roughly, but it's interesting to look at what Pendle is estimating as value of points or APR or yield for these seasons versus what Rumple is, because there's realizable arbitrage opportunities. For example, if Rumple is paying you more than Pendle is speculating on, then you can literally just take those Pendle assets, put them on Rumple, and then just sell the yield in real time. And you're making the difference between the IY on Pendle and the actual sellable points on Rumple. That's a strategy for another day. Let's look at some of the math we did. Welcome to today's episode of the Dojo podcast. Numbers are up. That's great. We say that every week and they keep going up. So I'm happy. Last week I was really heavily into yield farming. This week I'm kind of stoked that I'm still a bit leverage long exposed, but that has kind of got us thinking about what our take profit strategies are. Anyways, how you feeling today?
Good. Feeling good. ETH at 4K. I feel like we've celebrated this moment a few times now. But yeah, I mean, the markets are kind of just like trudging on. BTC quietly, like when it broke 100K, I feel like everyone paused, like at least the crypto world paused and took a moment of silent awe. And now breaking 105, 106, all these different numbers, people seem to care a lot less. And also the market doesn't pause as much, which is something I'm noticing. Before, when BTC was pumping, everything else just kind of stood still and let Daddy Bitcoin kind of lead the way. And now that's a little bit less true. We're seeing alts, for example, congratulations to everyone who either bought or held their hype airdrop. I mean, that has been just going bananas. Mid to high 20s now, which is just insane.
Very high 20s. It's $28 right now.
Yeah, exactly. Which is crazy. And meme coins are going off. We had the Pudgy Penguins launched their token today at a $4.5 billion FTV. So there's all sorts of wild stuff going on.
Let me really quickly get you to explain to me, like I'm 5, if you can, how Hyperliquid's auction system works, because this is totally new. People were saying Pump.Fun should have done this, but this is people are effectively purchasing the right to launch their token on Hype, and because Hyperliquid has done so incredibly well, it just gives these things pumpamentals as similar to a Binance listing, I think.
I don't think that we've had too many of them, right? I mean, I think Hype is certainly in vogue right now. There's a lot of attention. There's a huge amount of TVL. It's flipped Arbitrum. It's flipped a bunch of kind of crazy things in terms of TVL. And so what they're doing is a more kind of public system for listing, right? So if you want to list on Hyperliquid, the current system is you participate in the auction, and it's a bidding system essentially. And so we've seen some crazy high bids for tokens that want to list on here. I think that there is also a secondary system where things can just get listed because there's demand for it. I don't think Bonk necessarily went, or Pepe or whatever, but more for new stuff. So one that we saw recently was Solve. So Solve BTC, massive BTC-Fi protocol, secretly participated in the auction and bid. I think we also saw one that went for 500K recently. I don't know if that's a lot or if that's a little. I mean, we saw Binance charging, multiple % of total token supplies and stuff. So if you start comparing it to that, it's very little. But it is a cool kind of, I think, permissionless system for people who want to bid and launch in Hyperliquid. I was a little bit less under the impression that it was for token launches and more for token listings. It may be actually.
That's what I meant. Sorry, I meant listings.
Yeah. Because I'm sure there are certainly tokens that are native to Hyperliquid, people have launched memes and other stuff, I'm sure. But I think Solve is not going to be a Hyperliquid token. It's going to be a listing on Hyperliquid, but still incredibly interesting and very cool to see projects kind of leaning into the the bullishness around hype. I think that some of the first ones will probably do well. I think it'll probably be dilutive over time, where like, the 50th launch on Hyperliquid probably won't be nearly as exciting, but these first few could be very cool. I'm excited about the Solve launch. I think it could be very bullish. It's going to be one of the biggest, like BTCFi launches, and one of the earliest as well. So it's like,
I've seen Solve in a few places. I saw them recently on, oh man, what is that protocol? So it's an A.
Avant?
What's that? Is that again?
Avant? The Graviton fork thing that they're doing, this new CDP?
Yeah, it's a Graviton fork? I didn't think it was a CDP protocol. I thought it was like just a straight up Borrowland.
Maybe it's a Borrowland, but I think it was the same team that did Graviton.
Oh, okay. Yeah. So like they had tons of TVL over there on Binance Smart Chain. It was really, really good borrowing rate. And then so they've been blowing up recently. Do you have like a TLDR on Solve and what they're doing?
Yeah. So Solve is very interesting. Solve is deep into the BTCFi space. I'd say like the biggest players in BTCFi from my perspective feel like obviously Babylon, kind of like they're taking the restaking narrative. Then you have Lombard, which is like, I think trying to fill the role of EtherFi essentially and kind of being like the largest LRT or LST. In Babylon world, I'm a little confused if they're calling it LRTs or LSTs. Anyway, they're trying to be the biggest provider of that. Solve is huge. I mean, multi-billion-dollar protocol. And there's all sorts of very interesting things that you can do with Solve. So you can deposit into Solve and just get kind of like, Babylon exposure. So you can go and deposit there and you can, earn your Babylon points and your Solve points. They also have vaults. So like you can deposit BTC and get a yield on it from like using Athena, for example, which is like one interesting thing that you can do. If you just go up there to staking, I think is what it is. Yes. So the top one with the most TVL, which is like almost $1 billion, is they're just depositing into Babylon, and then you can take that LRT and go do stuff in DeFi with it, which is sweet and awesome. And then they have a Jupiter one where you're depositing BTC, and then they're using the JLP yield. They're kind of doing some basis trading with like Jupiter essentially.
So they're neutralizing the JLP delta?
They're neutralizing the ETH exposure, the SOL exposure, and they're basically like
exposure.
Right, not the Bitcoin exposure.
Yep.
Yeah.
Wow. So you're effectively getting like 26% on Bitcoin?
Yeah. It's pretty crazy. And then the Athena one is literally just like deposit BTC, collateralizing that BTC, borrowing stables, and depositing into Athena. That yield seems pretty small compared to where I would think it would be. 5%. Maybe it must be the bar.
Or needs to be leveraging value somewhere, in my opinion. You need to leverage that on Morpho.
I think what they're doing is I think they're depositing it maybe on something like Aave, and the borrow cost on Aave is so high that like it is dropping the like one it's slightly inefficient because of LTVs, and then two, they have to pay quite a bit to borrow. So but there's that also, one, and then
there's not a lot of room on Aave for SUSDE right now.
No, that's not what they're doing. They're collateralizing BTC, borrowing stables, and then depositing those stables into SUSDE and getting the Athena yield somewhere. Yeah, exactly.
Okay.
And then the last one is Core. This is the one I know the least about. Core is like a BTC L2, I believe. If it isn't an L2 and it's an L1 or something like that, please forgive me. I'm not super duper deep in BTC-Fi land, but they are staking BTC with Core and getting Core emissions, which is something like 16 or 17%. So these are like the four strategies they have.
So like this Core, which is like one of these BTC L2s, or I don't even know what the proper terminology is. The side chain, I don't know. They have a token already, I think, and they're emitting at a 16.57%. Like this is a validator yield. Like like you get it for staking, and that staking participates in the security of the network. I think it's proof of stake yield. But it's not being paid out yet. That's like the caveat. So they're accumulating the Core, but they haven't built the claim mechanism. So if you're going to participate in this, like, yes, 16% on like a BTC L2 governance token, which is pretty good. But as far as I understand, like you can't yet actually claim or realize that.
Yeah, I think that's right. And the way I believe it works is like most proof of stake networks, you stake the underlying asset, and then like that's what's securing the network. I believe what Core is doing is you can stake the Core token, but you can also stake BTC. And so your BTC is slashable under whatever parameters they set, but it's like doubly, like economic security protection between the BTC and like the actual core tokens. So I think Solve is very clear.
That's nuts.
Yeah. And you get a lot of Solve points, $2.6 billion in TVL, as they have that highlight there, 539,000 users. That's a lot of people and it's a lot of money. I think this could be a big launch. They've raised a lot of money. And it will give us at least a benchmark of like what BTCFi is worth. Like we haven't seen any major projects launch. Babylon hasn't launched. Lombard hasn't launched. Maybe there are some other ones, but like in my sphere of like BTCFi, especially kind of like the more Ethereum based side of things, this is one of the biggest players. So hopefully they will launch soon, and then we will be able to start benchmarking what Lombard might be worth, what these other protocols that are kind of playing in the same field might be worth.
Yeah, that's sweet. That's awesome. Do you know, like, are all 4 of these composable? Through fingers up, there we go, 4.
If you go, I don't think so. I think like the
Sol BTC, and I've seen Sol BTC B. And
that's the Babylon one.
Right.
This is, sometimes their system is a little confusing to me. They have like Solve BTC and they have Solve BTC B, which I know is like the Babylon version of it. I'm not 100% sure if you're just holding Solve BTC exactly what it's doing. Maybe they're like depositing into a combination of different strategies for you. They also have all these other like yield markets. Like there's a ton to do with Solve BTC. So
they're pretty Mantle aligned, which is kind of interesting.
Yeah, I think Mantle's trying to make a big play in BTCFi. They have their own BTC derivative called FBTC, which is like going to be, or is a competitor to Wrapped BTC. We've seen this kind of proliferation of BTC derivatives. So obviously Coinbase made one. Mantle has their FBTC. We've got TBTC from Thresholds and many more, obviously. But so Mantle is definitely trying to not only be in the like eigenlayer ecosystem with restaking, but also the BTCFi ecosystem with FBTC, Solve, and some of these other protocols that are going over there.
Okay, well, hey, okay. Let's look at this for a second. So Pendle is the lazy man's way of kind of estimating the value of an airdrop or estimating the value of points. And, sometimes I like the lazy man way. It looks like, with the 100-day time horizon, which is probably the more accurate way to look at this, we're getting like a 7 to 8% intrinsic APR. From my understanding, the Solve BTC BBN as Babylon. And so that would be, if we go back over staking, that would be this. So this is effectively saying Babylon points plus 12 XP and Solve points, those two things together have an estimated APR of 7%. Let's call it 7%. That's pretty good. It's because, if you think about that and then add that on top of, say, this Jupiter, you're not getting any of the Babylon points. But you can say, Babylon, extrapolate, and then Solve. Anywho, all I'm saying is Pendle allows you to speculate on this. Also gives you a nice fixed date yield. 7% on Bitcoin was unheard of last cycle. And
that's what I was going to say. Even during like the bear market, like we were fighting over 5% on BTC and being really happy, and like that was like not fixed rate, not dependable. So 7.7 is fantastic. Yeah, I think and some of these PTs you can actually do interesting stuff with, like on Morpho and other places as well. So
there's Morpho. I know Zero. I was looking at Zero Land. They don't have any. I don't know why Zero Land doesn't have these Solve PTs. Well, maybe they do. Was that on? That was on ETH mainnet. Yeah, ETH mainnet. It's surprising they don't have the Solve PTs because they have the Solve primitive for the Babylon. Maybe it's because these are the ones these ones expire next week. So maybe look at the later ones in the future. That would be awesome. And we can also see if they have Morpho. That'd be a lot of fun too.
Yeah, and the BTCFi has been a little bit slow out of the gate in terms of composability. Like there is a lot, but like obviously not as much as like, ETH, like ETH LRTs have kind of like integrated everywhere. I did notice, that super interesting to me, Kelp was added to Aave recently, and there is now $1.2 billion on Aave mainnet of RSETH, which it was amazing to me. I didn't quite realize how much demand there was for Kelp. I've been looped up on the EtherFi version of this for months and months and months, but it like filled up super quickly. They increased the caps, I think, and it filled up again. But yeah, $1.2 billion on Aave for Kelp. They're now at like 2 point something billion dollar TVL. So
Can you guess where they got the Aave integration?
yeah, right. It is like pretty flat to down. And then Aave has made big steps. But I remember them talking about wanting to get Aave and being kind of really think that they were for a very long time. And, you know, kudos to them for pulling it off and being the second team to have an LRT on Aave mainnet.
Yeah.
And $1 billion of a staked, you know, USDE. So it's crazy. Aave is integrating all these assets. There's also a proposal to have PTs on Aave soon. So like, you know, we live in a weird and wonderful world where Aave is adding new
Getting something grounded assets. Yeah.
Yeah.
Fascinating. Yeah, it would be interesting to see like what Kelp's current APR is. We don't need to dive into that. I mean, good for them. Kelp was also, look at that, incredible. Yeah, Aave can do wonders for you. It would be, they also have someone doing like a vaults for them, as far as I understand. Like they have the equivalent of the liquid vault that EtherFi has. They probably, if I had to guess, they probably just deposited all of that money into Aave and are like looping it, because every protocol wants that. Why wouldn't you? You multiply your TVL. You can get new mints if you go through that way. You can also repeg, and then, you know, Aave. So good for them. And I think every LRT sort of taking this approach. I would love for them to have a token. I've been waiting for quite some time there. But like, speaking of, I think, points speculation, I was looking at, you know, an old favorite of mine, which we've both looked at before, Rumple. Have you looked at them recently? They blew up to 50 million TVL. I know it's not a lot for a lot of protocols, but when we were looking at them, they're at 5 million. So this is a huge improvement.
Oh, I, you know, the whole points narrative is super interesting, and trying to price points and like all of the different ways people are building on top of points, I think are fascinating. Rumple has always been one of the ones that really takes a thoughtful approach to this. So I genuinely really like this team. You know, when I looked at it previously, as you said, TVL was low, liquidity was low. It was hard to know like how accurate some of these point totals were. Basically, the way it works is, you know, you deposit into Rumple, it creates your own kind of like safe wallet underneath. And then the actions that you're taking in DeFi are, you know, like within the safe wallet. And then basically what that means is you can sell the points, right? So like, you know, you can sell your points as you're earning them. They use concentrated liquidity to do, you know, provide, like basically create a liquidity pool for each of these like point, like I think there are 1,000 points per unit, and you can go and trade on concentrated liquidity on Uniswap. And like, you know, basically what that means is we get a real live market of like what people are thinking these points might be worth, right? Like, so, you know, hard to know exactly how accurate they are, but they are giving us data. And, you know, it's always fascinating to go and kind of try to extrapolate out what that means for the underlying assets.
Yeah. So we've done a little bit of extrapolation here. When you go to Rumple, you can click earn. Now, I will just admit that Rumple does not like Edge. Also, don't judge me for using Edge. I just didn't want to use Chrome this morning. But with Rumple, if you go to earn, you'll see all the different products you can just like deposit into there, and then you get the points into your safe wallet. If you go to trade, you can see the value of 1,000 points. So KPT means 1,000 points. So 1,000 Athena season 3 points, value that, you know, 2 cents. 1,000 Karak. I didn't even know we were in season 2 of Karak, by the way. That's wild to me because I don't have a token yet. 23-ish cents, you know, Symbiotic, EtherFi, et cetera, et cetera, et cetera. And if you know how many points are being emitted per day per dollar, roughly, then you can take these values and get an implied APR. Now, of course, you can also do that with Pendle, rumple, but it's interesting to look at what Pendle is estimating as value of points or APR or yield for these seasons versus what Rumple is, because there's realizable arbitrage opportunities. For example, if Rumple is paying you more than Pendle is speculating on, then you can literally just take those Pendle assets, put them on Rumple, and then just sell the yield in real time. And you're making the difference between the IY on Pendle and the actual sellable points on Rumple. That's a strategy for another day. Let's look at some of the math we did. So these, not 100% sure. We looked at the documentation and tried to get the exact emitted per dollar per day. Now, of course, Athena is also different. If you're just holding, I think it's USDE, you get 20 sats per day, which is crazy, by the way. At this valuation, it's 15% APR, which is actually pretty good, especially if you're doing the YTs on, what is it, Pendle? Because you're getting like 25 sats per day on the YTs for SUSDE, which is an additional 19% on top of the base rate yield of Athena, which is 20%. So really, the actual yield is almost 40%. And I think that the YTs on Pendle are going for like 23, 24, 25%. Let's see. SUSDE with 71 days out. This is pretty reasonable. Yeah, 27%. So that's a 13% difference. Now, when you're looking at these, you don't think, oh, so it's a 13% difference in APR. No, if you held this to expiry, it's a 13 divided by 27. Now, that's roughly 50%. So that's a 50% ROI if these numbers are correct. So let's say IY stays at 20%. So your actual yield of SUSD stays at 20% from the basis trade underneath. And you're selling your ENA points on Rumple the entire time. So you're effectively getting 40%, right? You purchased it for 20, let's just call it 26%, makes it super easy. Or 27, actually 27 is fine. Then you will have made a 50% ROI by expiry. So, I mean, if airdrop's like the same day. Well, actually, no, because you're selling your points in real time. It doesn't matter when the airdrop is. I think that's amazing.
That's a crazy strategy there. I had not fully appreciated, like the points part of SUSD and USD. Like people, I think, are pricing the ITs mainly based off of the underlying yield of like what Athena is generating and then giving it like some sort of premium. It looked kind of like
30 stats. I mean, that's nuts.
Yeah, it looks like they're kind of like pricing it at an additional, like 5 to 10% at most, when it looks like it could be 4 times that, double, like 2 to 4 times that.
Caveats, there's not a ton of liquidity. There is some liquidity enough to like not totally scale off, but it's only $100,000. So keep that in mind. The most liquidity currently is in Karak Season 2, the Zerkit Season 3, which is kind of surprising to me, and then Symbiotic. Symbiotic has $500,000 of liquidity, and then Karak and Zerkites have roughly $350,000, whereas the Athena Season 3 only has $133,000. So selling is going to have price swings. These are going to be a little bit arbitraged. I actually wanted to look at like providing liquidity for these, but I haven't, actually I kind of can. Let's see. Rumple, KP, EtherFi. No.
Just real quick, I was just doing a math based off of that pricing for Karak. Yesterday, so EtherFi is doing their 12 days of haze, where it's like this advent calendar where you get a different prize every day. The one yesterday, I think it was yesterday, maybe the day before, was 25,000 Karak points for every user who held at least 0.1, ETH or some equivalent of that, which ends up being, just based off this little point total, like $60 or something like that. So a nice little boost for the EtherFi farmers out there. $60 ain't much, but it's honest work.
Oh, actually, yeah. Tell me, so you're talking about the Karak?
Yeah, that 25,000 that you just unwrapped there, that's like, according to the point totals on Rumple, that's like $60 roughly. It's $59-$60.
Yeah, so you got that like automatically, which is awesome. And then on top of this, there's the 250 million Karak. Now, we did the math on that, like $56,000 using Rumple point valuation, $56,000, and you only have to hold these for 7 days. So you mint them and you hold them for 7 days. And as far as I understand it, correct me if I'm wrong, you can mint anytime during 12 days of haze. You don't have to mint, like you didn't have to mint yesterday. You could still mint and still qualify for this.
I believe so. I'm not sure, like for the more broad,
I know it's true for some of the other days.
$3 million. Yeah, for the $3 million distribution that they're doing of the EtherFi, you can mint at any time during the 12 days of haze. For that one specifically, the Karak one, I'm not 100% sure.
Oh man, because it was like the Veda one also says before the end of event. No, there's another one that like says if you deposit any time during the 12 days of haze. So I think that might be the case. We'll talk to EtherFi too.
Do they still price for Veda points? Huh?
No, I wish they did. I think the reason why they don't is because there's just so many unknowns with that particular launch, unfortunately. But yeah, so in a nutshell, it's kind of interesting. This one doesn't really count. There's no liquidity for it. I wouldn't look at that one. And then Zerkit who knows? But, Mellow plus Symbiotic, because these two oftentimes sort of go together, it's interesting to see that these two combined are roughly giving you 10%. So, if you're leveraging a Mellow LRT, for example, I don't know, Gearbox is the only place I can really think of that allows you to do it. Maybe you know another place, but if you're leveraging,
maybe I think Silo.
Silo, oh yeah, that's right, Silo,
Maybe.
yeah. So Silo, Gearbox, maybe there's another place. There's definitely some YTs, I think.
Does Euler
But
also?
Say it again?
Does Euler have them? Maybe not.
They might have a random pool for them. Update later. We'll see. But yeah, so that's 10%, right? And that's pretty good. That's prior to whatever yield you're getting on the underlying restaked ETH, I think, right? For the restaked
ETH, you're getting wrapped staked ETH yield. So it ends up being, let's just say 13%.
Yeah, 13% is amazing, especially if you can loop and leverage that. And I think on Gearbox, the borrow cost of ETH is, granted, Gearbox unfortunately doesn't have as much liquidity as competitors. So the borrow cost can be a bit all over the place. But yeah, I think this is really good and interesting to know. Man, if Rumble did not load so slowly, I'm going to try anyways. Nope. Yeah, even though I go back to it, it kind of doesn't like me. Let's see if I can pick out the KP Athena. Yeah, here we go. Okay. So this is the Athena LP. So this is the Karak Point Athena LP. That's a 500,000 one. They get like $20,000 of volume per day. Not a lot. But if we just select, a little small range and I don't know, put in like $500 of, it's 30% APR. That's not terrible. But like if you wanted to LP the points, you could, and you could get like a 35% APR. I'm not saying it's super interesting. I'm just saying it's possible. And it's kind of cool that you can backtest this with Oku under 30 time horizon.
Don't forget that, Rumple now has been gaining in popularity, 50 million in TVL or whatever you said. They also are going to have points. Yeah, so you will get points for, it's 30% real yield, plus I know they're incentivizing quite a bit for the LPs as well. So, could be pretty juicy for sure.
Yes. Definitely. Yeah. For it's like, redeem 0C. Oh yeah, that's kind of cool. I think I have some 0C I can redeem. That'd be neat. That was a cool sort of like sleeper airdrop. But okay, so full circle, we've just looked at some points valuation. We've just sort of seen that Mellow might actually be a play here. I'm kind of interested in that. What else is on the horizon? So like, unfortunately, unfortunately, Rumple does not yet price things that I would love to see priced, like Lombard and Babylon, and even solve points. Would love to see what's on there. What do you think's coming? We're rapidly approaching Q5.
That's what I was going to say. I think that I hope not a broken record here, but I legitimately think we are getting close to Barachain launching. We've been seeing a lot of bull posting. We've been hearing a lot of projects kind of like making noise that are going to be moving over there or they're going to be native to it. They are going to be doing a super interesting campaign to bootstrap stuff using this new protocol called Royco, which is kind of like this marketplace for liquidity, essentially. So like you could almost think about it as like Merkle. It's like, in some ways similar to like Merkle. If you just want to click on their bio there, we can go straight to the website. Yeah. But basically it's like a way for protocols to bid on liquidity. And then you click on terminal there on the left-hand side. Yep. To bid on liquidity. So it's kind of like
Wait, that's really interesting. But I thought this was, so my understanding was this is a pre-launch campaign. They're already net APRs. Can you explain this to me like I am a baby?
Yes, absolutely. So first of all, there's two things. Royco is like the underlying protocol, which will just be existing on ETH mainnet and Base and other chains as well. There will be a dedicated version of this for Barachain. That is not live yet, but I do think spending some time and understanding Royco now, so we are prepared for Boyco, which is the Barachain one, is really worthwhile. I think the way to wrap your head around this, Stephen, is like this is almost like looking at Merkle. So like if you just like look at the second one that's there, swap USDC to STK Go.
Yeah.
That is basically like, you can see they're incentivizing $20,000 of Go, which is a stablecoin, for people who take that action. So it used to be, you know, with like Merkle, people could incentivize like deposit into this pool, LP this, do that thing. You can have kind of more complete actions here. So this is for someone who is swapping from one asset to another asset in a specific like liquidity pool for a minimum amount of this. And they can basically set out all of the details of like the steps you need to do in a much kind of more complete way. Whereas Merkle, you know, was like more simple actions that LPers could provide. And so because you can kind of build in all these different steps that you need to do to receive these rewards, that's why Berachain will use it.
Okay, I was gonna say, do we have to do this? Do we have to like use the scripts and like do this to the smart contract, which, you know, possible. Certainly people in the dojo do interact with the smart contracts directly, and it intimidates me a bit, but it looks like they've made things really easy on the bottom. You literally just connect your wallet and then just chuck it in there.
Yeah, no, they make it super easy, but I think they just tell you.
Any chain? This is ETH mainnet.
This is ETH mainnet. So yeah, if you wanted to go and use USDC to buy staked Go, you would get paid 28%. If you scroll down there, you can see the difference.
How does this relate to Berachain?
Yeah, I'm getting there. So just scroll up a little bit. So you can see, all right, and down a little bit, just right in the middle stuff. So the underlying yield of this is you are getting 11% for just the underlying staked Go. You're getting 12% for the Aave incentives. And then because you're using Royco, you're getting an additional 5% for doing this specific action. And so that's the key part here is people are bidding on you to take specific actions with your liquidity. This is just the current live example of it. So
so this is just Royco in general. And then Boyco is Berachain's version of Royco.
Exactly. And so in the future, when Boyco launches, it will be like, you know, go and deposit into Dolomite, you know, like deposit your ETH and lend it out on Dolomite. And Dolomite might say, we will give you this many of our tokens. Now, their token and many of the Berachain tokens are not live. So we will have to have some dubious kind of speculation on what different points, different valuations, all sorts of stuff might be worth. But it is a way for them to bootstrap liquidity, not only into Berachain, because this will be on Arbitrum and ETH mainnet and all these other different places where people can deposit liquidity from. So my guess and kind of understanding of how this is going to work is just by depositing into Boyco in general, you will be earning Berachain tokens, like as part of like them bootstrapping TVL in the whole chain. And then more specifically, you can then also decide, I want to deposit into Dolomite. I want to deposit into Goldilocks. I want to deposit into Kodiak, or fill in the blank other, you know, Berachain application. And then you will get an additional incentive on top of that in the form of maybe they have rewards for, you know, Berachain tokens that they can distribute, or maybe it will be in the form of their own token as well.
What is this 221%? I mean, 0 TVL. So I'm also surprised that this is so small. Royco only has $24,000.
Well, they only have $23,000 of incentive. So if what you're looking at here is all of these are just yields you could go and get without Royco. The only two that are exclusive are the top two, which is like the like ad incentive thing. I don't know why that's saying that. Maybe that's like
I don't believe that either.
Maybe that's just like a
UI
website error. Yeah, something like that. But, you know, I think what they're trying to be is like, number one, like a source where you can just go and like look at all the different yields. And number two, a place where protocols can bid for your specific action. The same way I was telling you the other day when, you know, like a few shows ago, you know, for lending out wrapped BTC and borrowing USDT, you were getting Aave merit.
Was that
rewards?
Right. Can you send me a link to that again? Because I wanted to check on that. I don't think I'm getting that anymore.
Yeah, I'm not sure. Well, I think you have to claim it from that website. We'll find it after the show. But, you know, I think that's an example of like kind of a more complex action where you're like depositing one thing, you're borrowing another thing. You know, we've seen here you can swap, you can do all these different things. And so this will be the marketplace for liquidity where protocols.
Wait, I got $14. Look at me. Let's go.
Yeah, there we go, man. There we go. I don't know if this is still going. Maybe it is.
Well, it was $4. I think it was $4 last time. So I got someone's giving me money for something.
Yeah. Congrats, man. Congrats. It's like a whole, you can go get a sandwich or something like that, or coffee. Yeah.
Yeah. All right, awesome. So one of the things I wanted to bring up sort of with this whole narrative, this is maybe a little bit like more theoretical, is that, not really, is we've seen such a struggle for liquidity, and liquidity is king. I mean, he who can direct liquidity, and this is kind of a narrative for Turtle Club, we can get into on a different time, but who can direct and attract the lend side liquidity controls DeFi, and you can charge such a crazy premium for that liquidity, which is really one of the major value adds of like hedge funds this cycle. Hedge funds just go around to any money market and say, hey, we want you to pay us 30, 40, 50% APR, maybe not 50% in your token, and we'll give you lend side liquidity for X amount of time. Now, it's interesting that protocols would be willing to do that instead of just like incentivize it on their own front end, but they are. With these like private token deals, maybe there's vesting involved. What I see in Royco is one additional place where they could just say, lend USDC on Aave, lend whatever, and then just incentivize that very specific action. And maybe they could even add additional parameters like lend USDC into Aave for 30 days, for 50 days. And if you do that, then you unlock this outsized return because there's some sort of time premium to this. And I think things like that will hopefully deepen the lend side liquidity in DeFi, because even though there's already billions of dollars lent, really that's how you scale leverage. And leverage might sound scary, but with like pairs and NAV oracles and more robust liquidity, it's not as scary as it once was.
I think you just gave the perfect bull case for Royco. That is exactly what they're trying to do. They're trying to be the marketplace for that. They're trying to encourage liquidity providers, to do things which they may not be doing, obviously, and like allowing protocols to directly bid for liquidity to take specific actions. So yeah, I think it's gonna be super interesting. I'm definitely paying attention to it. I think the Berachain stuff could be super interesting. There's so many yield opportunities out there right now. But I would just like to say congratulations for Bitcoin all-time highs. We are now, as of this second, at 107.9, very close to 108, which would be very exciting. So,
wow, 108. We so did down it. We counted on screen. Oh, that is awesome. That's so cool. So cool. And then, ETH is still technically above 4K. So congratulations on ETH holders. We broke 4K again today for what I want to say is like the 5th or 6th time. Maybe we can just keep breaking it. Just keep smacking and come back.
I heard that ETH lags. Have you heard that?
I've heard ETH lags. Yeah, ETH lags. Well, so that just means like next month, ETH is up for a huge run.
At least some might be 4,100, at least we'll get there.
Yeah, 4,100. Maybe we'll even get close to all-time high this year before the cycle ends. That's incredible. Very cool. Glad we caught that on camera. I'm half exposed to BTC. One of the things I really like about being half exposed to BTC is I get to cheer for Bitcoin whenever it rallies now, instead of being like, oh man, I wish ETH would do that. So now I feel really good when I see things like this. So that's super exciting.
It is interesting to see, like BTC doing amazing things, ETH inching along, as you said. Sol has been in a little bit of pain. It feels like a lot of the like hype around Sol has moved to hyperliquid. So like, that's an interesting thing. It does bring up this point, which I have been spending a lot of time thinking about, and I'd love to just like chat with you about, but it is like profit taking. And to be clear, folks, I'm not saying the bull market's over. I'm not saying you should sell. I'm just saying it's always good to be thinking about what your exit strategy is. And, I'm already, thinking about taking profit on alts, thinking about at what levels I want to be, taking profits on BTC, on Sol, on ETH, on other stuff. But, that's maybe a question for another day in terms of like TA and market structure. I think like the actual practical question of like what to rotate into is super interesting, right? Like the classic play for a lot of folks is like selling alts into BTC and ETH, right? Like that's one thing that people tend to do a lot of. There's also people that just want to like, sell it directly into stables. But it does lead to the question of like, and then what, right? And then do you just like send it straight to your bank account and go off on your merry way. Like, that's probably not my style. I will probably be still in the trenches, looking for yield, super interested in this stuff. I think that like stablecoin farming and delta neutral farming could be a very interesting play, looking into the future. But, these counterparty vaults that I saw you just had up there for a second, I think are also very interesting. So yeah, let me just pause there. I'm curious to hear about your thoughts. Are you thinking at all about taking profits? Are you just holding in for like the long term? And if you do take profits, have you kind of started to think about what strategies you might implement?
Yeah, for sure. I haven't started taking profits yet. As you know, it's a bit of a meme by now in the dojo. I plan to take profits mid-March, just because, trust me, bro. And so mid-March is where I plan on either scaling out really severely or just taking profits or changing my investment strategy from being turbo long to a neutral or mostly neutral. And my intention there is to like benefit from the upside that I've gained so far, and then just transition into. I'm still considering whether I want to go bearish bias, because clearly there's going to be a bear market. Being in a bear market, you would being short is better than being neutral in a bear market, just like being long is better than being neutral in a bull market. But it's always harder to commit to being short than it is to commit to being long, and the yields are weirder. You have to do weirder things to benefit from those yields. Oftentimes, you have to collateralize stablecoins or borrow the volatile and then sell the volatile to actually be short on it, and then like you can either farm with the stablecoins you got from that and then buy back the volatile asset later when there's a whole bunch of weird things you can do. But in the interim, before I go into a short thesis, I will probably go into a neutral thesis, or at least a partially neutral thesis. One of the things that I like that we talk about ad nauseum is JLP, because as you just mentioned, Solana is hurting, right? Solana is down, I think like 17%, maybe 16% today. It is down, 16%ish since its all-time high. It's all-time high and its recent high, both the same thing. While at the same time, JLP is hitting all-time highs nearly daily, which is insane to me. So JLP is like 45% Solana, and then 20-ish% BTC, 20-ish% ETH, and then like, no, what is that? 40, 20, 20, 60, and then 35% stablecoins. So it's a really nice index of the top 3 L1 assets. I mean, technically XRP flipped Solana, but let's ignore that fact for a second. And it's performing really well. It also has this intrinsic APR currently at 80%, which is wild to me. Now, granted, that 90% APR is baked into the price of JLP, so I tend to discount it and don't even look at it because, it is the price, like it's baked into the price of the asset. So I would rather just look at how does JLP perform versus USDC? How does JLP perform versus Solana? And the answer is it benefits from the upside of all of these blue chips with remarkably muted volatility. I mean, can you think of a better chart than that versus USDC? And this chart is going all the way back to, February, almost a year ago. So this is a year's worth of price action, very muted volatility, very small downturns. I mean, I guess this isn't that small. That's 10%, and that's like one of their biggest swings. Really incredible stuff. I'm not trying to shill JLP. We have no affiliation with them whatsoever. It's just, out of all of the CPVs this cycle, JLP to me has been the breakout success by far. I mean, yes, I love Hyperliquid's vault. It looks like, cranking out 32%, really good historical returns. Really been interested in DYDX's Mega Vault, 44% APR, way higher than 44% APR initially and through periods like this, but more recently around 45% APR, paid in USDC, denominated in USDC. That's incredible, 56 million TVL, but you can't beat JLP's price action. And if you're leveraging it, you're doing even better. And you can leverage it on a number of places. You can even hedge it in weird ways. Drift has like 4 different vaults built on top of JLP. JLP is to Solana what GLP was to Arbitrum last bull market. So anyone who remembers knows that GLP and GMX was like the core protocol of all of the Arbitrum ecosystem when Arbitrum first started. Now, GMX is like an afterthought, but everything was built on top of GMX initially. And I kind of feel like JLP, aside from the meme coin frenzy, is the core and heart of Solana this cycle.
Well, you're missing out on one of the biggest points, which is it's $1.5 billion. I mean, like, you know, like the scale and the size of this thing is phenomenal, right? Like DYDX, something like 50, HLP, something like 300 million. Those are not small products. Those are great and interesting. I think they're all kind of different. Just to kind of return back to the original point of like profit taking and like, should counterparty vaults be considered? I definitely think so. I'm like participating in these. I think all three of them are a little bit different. You know, JLP is a basket of Sol, ETH, and BTC. You're basically just like, for all of them, you're benefiting from fees. From all of them, you're benefiting or losing potentially from like the profit and loss of traders. So that part is the same. For this one, it is slightly different because you do have some exposure to the assets. It really depends on open interest, right? So like if everyone is borrowing these assets and super long these assets, you know, I don't think it's quite right to say that you're actually like long 45% Sol. You know, but like, as you pointed out, it's actually outperforming Sol, right? So like, you know, we can pull that chart up if you want to, but like against dollars.
I just want to point out the fact that if I'm understanding correctly, and I might not be, by market cap, this would make JLP a top 100 coin.
Yeah, I think it is. You know, and the other thing which I love about JLP is it's so composable. As you said, you can use it on Drift, you can use it on Nino, you can use it on these different places. The other counterparty vaults have not been super composable, which is like definitely a downside.
Hyperliquids can be composable because it's not 4626 compliant. It's not even like doesn't have shares, which is kind of unfortunate. And I don't know that's the case for a DYDX, but I think it is. So I don't know.
Yeah, I mean, they probably could figure out a way to get around that. We'll see. We'll see if they end up doing it. My personal approach, and so like, I definitely plan to rotate into JLP. I think it's a great asset. I do think that like it may be slightly riskier in a bear when there's less open interest and you have more exposure to the underlying assets. And it may perform worse when there's kind of just generally less attention in a bear market, less open interest, less fees. The other two will be affected by that a little bit, but they are denominated in dollars. And then like there are additional bonuses to the other two as well. So just real quick for HLP, we don't know this, but you may get a future Hyperliquid airdrop, right? Hyperliquid did save some of their tokens for a future airdrop. Their protocol is now worth $1 bajillion. You know, like we can speculate that potentially HLP providers may see some additional upside for future hype airdrops. And then for DYDX, they are giving 50% of the revenue of their protocol to this vault. So, you know,
that is baked into the estimated APR. That's not like some additional thing you'll get.
No, it's not some additional thing, but you know, it is a constant source of revenue that even if like, you know, there is a little bit of like a downturn in open interest or something like that, I guess protocol revenue will be affected as well, but like it's maybe a little bit less linear in that way.
Yeah.
So
well, it's another way in which fees get back to the counterparty vault user, because already counterparty vaults tend to benefit from fees. This is just a different way to redirect those fees back to the CPV.
And they're also all, I just want to say this, risky. Like these are all risky. These all could get hacked. Like, you know, I've heard people call JLP like a savings account. And in some ways, like, you know, you just wax lyrical about how amazing it is. It is certainly amazing. I would not want to have 100% of my portfolio in it. And so one of the strategies I will be doing when I do take profits is probably rotating into all three of these. One, for diversification. So I'm not affected just by one of them, you know, solely. I do think probably JLP might perform the best, but nice to be diversified so you don't get, you know, affected by like some Oracle, whatever, exploit something, and then just get wrecked. Two, they all, you know, maybe you get a hype airdrop in the future and maybe that has a ton of upside, you know, like maybe there's like Jupiter is also going to have like $1 billion airdrop in January. Maybe you participate from that. Maybe the DYDX fees start going up a lot, right? So like being diversified in that way makes sense. I haven't decided what percentage of my like profit taking I'll put into this, but it could be a lot, like maybe like 30 or 50%. If I'm holding stables, I might drop into this. The other parts, you know, probably will be lower yield, like generally stablecoin farming. Like I think you're probably going to be looking at more like 15 to 20, maybe if you're not as focused 10, and maybe if you're really, you know, in the trenches 25 to 30 in a bear market, I mean, but I'll also be doing that as well, I think.
Yeah. For sure. And, you know, there is also when institutions are accumulating, it's not a bad idea to also consider accumulating. So when we start seeing the crazy long year-long crab action, I feel like this cycle, I might actually try to accumulate some assets and take some punts on some things. And now that we have things like Echo, participate in some pre-seeds, like as a KOL, I get a lot of these seed on offers. I tend to be really nervous about them because I don't like vesting for 2 years, 3 years on my assets and having a really big opportunity cost on capital. But during a bear market, why not, right? Throw some money, get it to you, hopefully during the bull market, and it has way outsized returns. I really think those are like the patient plays pay. Is certainly one thing to consider. So that's another angle, and it's available to anybody to some extent. I mean, you do have to do some degree of like KYC and that kind of stuff for things like Echo, but that becoming more available to people has been really interesting to see. And I think like it's kind of like the ICO craze, which for better or for worse, but from a different angle. I do want to like just double click back on the fact that this JLP yield is the underlying yield for that solve staking APR we talked about earlier. So that's really cool that you can have that JLP yield in some way giving you a yield on your Bitcoin over here on Solve, which kind of explains why we're getting that 26% on Bitcoin. I would love to see this composable. So I know we have a conversation with the Solve team. I'm going to ask them like when can I take this on to Pendle or something? Because that could be a lot of fun. Anyways, I know we're pushing the hour here. Any last thoughts on taking profit or stablecoin yields?
Yeah, no, I mean, and just to be clear, I just want to reiterate, like, no one knows when the right time to take profits is. It's probably prudent to just do it a little bit along the way. I certainly think starting to talk about it and think about like, what levels you'll be doing, taking profits at, what you will be doing with those funds once you do take profit. It's good to have a plan because the markets get so crazy and it is hard to keep your emotions in check. And, maybe, one of the classic things people say is like when you start taking screenshots of your portfolio value is probably a pretty good time to take some off. So, who knows when the right time to do it is, but I think doing it incrementally is a good idea. That being said, things are bullish, things are exciting. I just would encourage everyone to kind of like stay locked in. I was talking to someone recently and they told me that this is our Super Bowl. So, it is definitely an exciting time and a time to be paying attention and trying to just like absorb as much of the good yield, as much of the good gains as you can, because it's not always like this, right? And so trying to benefit as much as you can from it with as much risk as you're kind of willing to take, this is the right time to be doing it, I think.
Yeah. And as a reminder, bull markets are like Instagram. You're going to see everyone's highlights and you're not going to see everyone's losses. So you're going to be seeing, oh my gosh, that person just made $1 million on hyperliquid, life-changing gains. It wasn't me. Should I go chase this? Should I go chase? I've failed the bull market. I'm only up 3x or 4x on my principal or whatever. You're not seeing everyone's losses. You're not seeing their principal. You're not seeing what they've invested. You're not seeing the time they're dedicating to research. You shouldn't necessarily be comparing yourself only to the wins you see on crypto Twitter or in the trenches of Discord or on Telegram. Just if you keep grinding, if you stay in the trenches, if you play in a risk-adjusted smart way, you will grow your portfolio, and that is the goal. The goal is not to beat all of the cartoon characters on Twitter. The goal is for you to grow your portfolio. That is the goal. Keep that in mind. Bull markets can be more psychologically draining than a bear market. In a bear market, we're all laughing at each other's, quote unquote loss porn. Oh, I lost 25% of my portfolio. Oh, I lost X, Y, and Z. Here's another exploit. And we joke because it's cathartic. And that's a totally different vibe from everyone bull posting their crazy wins on Twitter, where you always feel like you're missing out. So different psychological factors to be aware of. Remember, it's a minefield. Remember, your goal is to increase your portfolio size and to maintain those winnings, not to beat everyone else you see.
Wise words. Well, thank you so much, Stephen. It's great to chat as always. Yeah, I'll leave you the last word.
And have a wonderful rest of your day.